I lead the startup and fast growth team in Mason Hayes & Curran, and my elevator pitch is that I help founders take an idea and transform it and scale it into a multi-million euro business. And in practice, this means that I help companies navigate the capital raising process, taking cash in and taking investment in from investors, something that has become much more difficult in 2023. I also help companies with corporate governance, and given that starting a business has a very steep learning curve, particularly for first-time founders, this involves really focusing on key risk issues that could cause problems for the business in the future. And I also help companies with their employee equity incentive arrangements. So equity incentives can be a great tool for recruiting employees. Employee share option plans are the most common and most well known, but they're not necessarily the most tax efficient way to incentivize your employees. So what's hot and what's not in funding and investment at the moment? Well, unsurprisingly, artificial intelligence is the topic du jour. Companies in the AI space are raising more money and at higher valuations than other companies. But another area which has slightly flown under the radar are impact investment companies, particularly those with a focus on ESG. And what many people might be unaware of is that the performance bonus payable to managers in venture capital firms who make the investments into these companies are increasingly linked to ESG metrics in their investee companies. This offers a great opportunity for companies in the impact investment space to really maximize the amount of investment into their business. What's not? Well, after blockchain and cryptocurrency having a really hyped past number of years, there's been a really dramatic fall off in the amount of cash going into companies in this space. So what does the funding and investment landscape look like in 2023? Well, Tech Ireland have just released their funding report for the first half of 2023, and the picture is not great. They report a more than 50% decrease in the amount invested into Irish startups compared to the first half of 2021. There's been a number of global economic headwinds, so the collapse of Silicon Valley Bank, rising interest rates, high inflation, all play a part to make funding much more difficult and much more challenging. For companies themselves, the story really has also been raising at lower valuations, or bridge funding, particularly safes and convertible loan notes, to avoid having to raise at lower valuations than they might have done previously. And the third big area that we're seeing movement on is the area of female founders. And while companies with a female founder or a female co-founder received less investment this year than they have in the previous 2 years, to a certain extent that's to be expected given the overall drop in investment amounts. However, when you actually dig into the numbers based on the Tech Ireland report, of the about 117 companies that have received investment, only 15% of those had a female founder or a female co-founder. When you look at the amount in terms of cash invested, again, it's even less, at about just under 15% going to female-founded or female co-founded companies. In context, this represents the second best performance in terms of euros invested into companies with a female founder or co-founder in the past number of years. So whether this represents a glass half full or a glass half empty, I suppose, is a point for debate. I think what's not for debate, though, is that there is still a very significant amount of work to be done in the Irish ecosystem to ensure that there are investment opportunities available to all founders, regardless of gender.